Well, the GTA's housing market saw a bit of a freeze in February. Sales were down by nearly 17% last month. That's year over year as the market rebalances from all the fall buying frenzy. Jason Mercer joining us on Breakfast. He's the chief market analyst at TREB, the Toronto Regional Real Estate Board. Let's break down these numbers. Jason, February down 17%. That would sound dramatic in almost any other context. How do you put those numbers into perspective, though?
Yeah, I mean, it's true. We were down from last year's record pace, but it was still the second best February on record. And so we're still seeing a lot of demand for ownership housing in the Greater Toronto area and even surrounding Greater Golden Horseshoe. And as we continue to see recovery and growth in many segments of the labor market, and home buyers are still taking advantage of very low borrowing costs, the interest rate hike yesterday notwithstanding.
Yeah, I mean, that interest rate, 0.25%, I mean, a lot of people's stress tests are based on, of course, significantly higher interest rates. Do you expect to see a further cooling perhaps in March or April, Jason? Or on the flip side, a lot of laymen sort of look at the spring housing market as the opportune time to sell because things are freshening up and look a bit better.
Well, I think you hit the nail on the head with regard to interest rates. I mean, we are in certainly a different scenario now than say, previous rate tightening cycles over the last couple of decades, in the sense that, there's a difference between the contract rate that you negotiate with your lender versus how you're qualified. And so it remains to be seen, how much that gap sort of factors in. Right now, today, even though, say a variable rate mortgage, you're paying an extra 25 basis points, you're still being qualified at 5.25 like you were 2 days ago. Now, in terms of, the market and how it's unfolding, I mean, we've seen pretty strong demand, both in terms of, low-rise sales, single-detached, semi-detached, and townhomes, but also a continued recovery on the condominium apartment front as well.
Right. Now, Jason, we spoke about a month ago when you sort of put out your 2022 forecast. I'm sure you factored in interest rate hikes, but there's sort of mixed messaging now from the Bank of Canada. Maybe there'll be 3 hikes, maybe there'll be 5, maybe there'll be 6. How does that sort of factor into what you're projecting now for the rest of the year?
I think the main thing is that, when you look at past interest rate tightening cycles, what we have seen is that, sales initially dip a little bit as households sort of get resituated in the marketplace. So on average, over the last couple of decades, when you start to see the Bank of Canada raising its rates, you see sales dip by about 10%. And that certainly factors into our forecast for this year coming off the 2021 record. But at the same time, what you see over, say, the course of a couple of years is that those sales come back and actually get above those pre-interest rate hike levels. And so it's not binary where people just say, look, I'm going to buy a house or I'm not. Mm-hmm. Instead, what you see is they say, well, I may have to look at a different type of home, or I may have to look at a different area of the GTA, but ultimately most of these buyers come back into the market. Okay,
Jason Mercer from TREB, thanks so much for joining us and helping break down the latest numbers. Have a great day.
Very welcome.
Thank you.